Don't look now, guys, but it seems those Twitter randos might have actually been onto something after all. In the last few days, the previously unimaginable thought that Nvidia might actually be round-tripping their cash, making investments in their customers appear like organic revenue growth, has actually gone mainstream. Recently, legendary short seller Jim Chanos, Barclays analyst Sandeep Gupta, and even CNBC's Dan Nathan have drawn attention to what I have been saying since last August. What's up, guys? I'm Nobody Special, and 6 months ago, I started researching some suspicious developments around Nvidia. I became aware of a company nobody had ever heard of called Coreweave that seemingly in the blink of an eye went from a couple of guys from a failed hedge fund with a side hustle Ethereum mining operation to a startup tech unicorn darling of the financial press with a multi-billion-dollar valuation. And while the talking heads on TV were busy fawning over these guys like Jim Cramer in a Theranos interview, it took me all of 5 minutes on LinkedIn and Google to realize that these Coreweave guys didn't know jack shit about artificial intelligence, but they did appear to be very well versed in things like carbon credits, shell companies in the Cayman Islands, and cryptocurrency, all things that are known to attract shady actors and financiers from all over the world. A pattern would quickly emerge where it appeared that unbelievably corrupt financiers were funneling money into Nvidia via investments in Coreweave. What's worse, Nvidia appeared to be getting in on it themselves, making dozens of investments in their own customers, where they would supply those customers with a strategic investment, and those customers would take that money and hand it right back to Nvidia to buy their chips, creating the illusion of organic revenue growth. That's a phenomenon known as round tripping, and while it may not necessarily be illegal, it has been the calling card of many famous Wall Street frauds. The 3 videos that I made about this would go on to receive about 2.5 million views on X, which is a huge number for a channel like mine. And while the feedback from ordinary folks was overwhelmingly positive, the mere suggestion that anything not above board could be going on in Nvidia was met with disdain and mockery from finance bros and the mainstream press. And when I kept covering the story and kept digging into these guys, one analyst begrudgingly issued a note debunking the work. And by debunking, I mean personal attacks in the headline, feigned indignation, and labeling it a conspiracy theory, all while ignoring literally every factual detail about the research. That analyst note would make no mention of myself by name nor any of the other researchers who participated in this work, and they left the reader with no way of going and finding those videos or finding that story to make up their own mind. The message was clear: don't look. And while the mainstream press totally ignored the story about Coreweave, that analyst note debunking the conspiracy theory would go on to get picked up by MarketWatch, Business Insider, Investor Place, Forbes, Markets Insider, Investing.com, MSN, Seeking Alpha, CapEdge, TD Ameritrade, and Moomoo. Moomoo? Really? And here's a list of all the media outlets that reached out to me for comment. Now, since the initial momentum of that story faded, much to the delight of Nvidia bros everywhere, Nvidia shares have done nothing but go straight up and to the right. Stock market manias and speculative bubbles are funny like that. But that may be about to change, because last night I saw this. Gotta send a shout out to Wavy McFly on Twitter, who posted this one just a few minutes ago, and I hadn't seen any of this news until he posted it. And he tags myself, Samantha LeDuc, Kakashi111, Dario CPX, and Finance Lancelot, all guys along with a few others who've been involved in some of the Nvidia research involving Coreweave and how Nvidia is round-tripping their own cash, as well as a lot of other questionable things about the way Nvidia does business, not to mention the valuations and the technical case behind it. And Wavy is saying, you've all been vindicated. Financial Times article, Sell Nvidia, talking about the shenanigans that Nvidia has been engaged in to juice their earnings, referencing a note released on Friday by Barclays. And since I'm not going to pay for a Financial Times membership just to see my own work regurgitated in my direction, I'm going to go with the screenshots that Wavy posted here. Sell Nvidia, sanctions risks, self-funded demand. There it is. There's the Coreweave story right there. Self-funded demand, customers becoming competitors. Just don't tell the shareholders. If only somebody had warned months ago about this story. Now, guys, stop me if you heard this one before. Nvidia's venture capital arm made 33 investments between January and October of 2023, with 11 of those in the last fiscal third quarter. That's a significant rise in activity. Now consider between 2005 and 2023, it had done at most 4 venture capital deals in any given quarter. Though the total amount of funding and specific structure of the deals, cash, stock, tech, or services, are unknown, Nvidia has become linked with a host of companies that we expect are using Nvidia technology. CoreWeave, for example, an Nvidia-based cloud computing startup, not only uses Nvidia chips, but has secured $2.3 billion in financing using Nvidia H100 GPUs as collateral. This financing will be used to purchase more advanced chips, most probably from Nvidia. It is estimated that CoreWeave was Nvidia's 7th largest customer of H100 GPUs in 2023, purchasing 40,000 of the processors for 4.5% of total revenues. An H100 GPU sells for about 30,000. I've seen estimates as high as 45. Meta and Microsoft tied for number 1 at 150,000 each. The core takeaway is that an increasing share of Nvidia's revenues from the past 2 quarters can potentially be attributed to startups Nvidia has funded itself. In other words, exactly what Jack has been saying all along. These companies operate in robotics, machine learning, SaaS, and cloud computing, all sectors relying on AI chips. This self-funded demand is a risk because it is dependent on Nvidia's own investment spending and potentially misinterprets independent demand for Nvidia chips because Nvidia is essentially funding its own customers. If only somebody had warned you about this as early as August of last year. But it wasn't just that analyst note from Sandeep Gupta over at Barclays that's picking up on this CoreWeave story. Check out this interview that famous short seller Jim Chanos did over at Risk Reversal Media on January 30th. That's a YouTube channel that's run by Guy Adami and Dan Nathan, 2 of the traders featured on CNBC's Fast Money. I'll put a link down below to this interview. Head over there and be sure and tell him that nobody sent you. Listen to what Jim had to say.
One of the things that by 1999 could have told you you were getting in the later innings of the tech bubble in the late 90s was when you began to see a big drop off in the quality of the earnings of the big tech guys like Lucid and Cisco, whatever. And a number of these companies got into the business of not only doing barter transactions, but also having venture arms invest in companies who then bought their products, right?
You're seeing that around the edges now.
I was going to say, you're beginning to see, people are beginning to report on, which I think is a good thing, the fact that some of these companies now have reasonably large venture operations under the corporate umbrella and are investing in companies that are turning around and buying their products. The longer this goes, if we start to see more and more big cap tech companies begin to use more and more fun and games to make their earnings estimates, then the parallel with 99-2000 is going to be hard to miss.
Once again, does any of that sound familiar? Companies investing in their own customers who turn around and hand the money back to them, comparisons to the dot-com bubble, all things I've been saying on this channel for months. Now, last night on CNBC's Fast Money, Dan Nathan would go on to mention that interview with Jim Chanos, as well as the note from Barclays about Nvidia's self-dealing with their customers, again reiterating exactly what I've been saying on this channel since August. Now, I will not don the tinfoil hat for just any occasion, but I couldn't help but, after reading this story in the Financial Times, but go back and look at some of the videos that I made about Nvidia and CoreWeave. Scrolling down, here's a video I did about pensions, buy now, pay later loans, the hyperverse, some more commercial real estate. And here, here's the video I did with Samantha LeDuc about the $2.3 billion loan secured by Nvidia chips and how that correlated with their revenue beat in that quarter. And well, as it happens, the media could not be played. That's interesting. Okay, let's move on from that one. Let's look at part 2 of my CoreWeave series where I talked about the Magnetar trade and Magnetar Capital. That video won't play. Okay, let's skip to part 3 in the series I did about the Nvidia story. Let's see what we got about the shell companies and the carbon credits, and that video won't play. Well, what's going on here, Elon? How come none of my CoreWeave videos will play on X on the day that the Financial Times releases an article that basically vindicates these videos, and then coincidentally, these videos stop playing, And guys, it's only the CoreWeave videos. Look, here's my Binance video. That one's playing. Here's my FTX in 99 seconds. That one plays. Buildings in Van Barton buying back their own building at their own short sale for $20 million less than they owe on it. That one is playing. All my other videos will work, but my CoreWeave videos won't work in my highlights reel. Guys, the timing of that, yeah, that's a little, maybe if I click on this. Let's try it here. I click on, nope. And guys, before you ask, I've already tried on my phone. I've already tried it on my wife's phone. And I've noticed some other people tweeting out that these videos suddenly don't work. Elon, I hope this is just a minor technical oversight, which will be resolved very quickly. Could this maybe have anything to do with the financial media suddenly paying attention to this work and not treating it as the puerile, childish work of Twitter randos who you totally shouldn't get your financial investment advice from? So long story short, the story of Nvidia round-tripping their own cash through their customers, including CoreWeave, is finally starting to go mainstream. Now, one by one, all those media outlets that ignored this story while carbon copying the Analyst note debunking the Twitter randos conspiracy theory will all start to fall in line and cover this. That is, after the last 6 months of telling you not to listen to Twitter randos while urging retail investors to pump more and more money into Nvidia stock, which was obviously a speculative bubble. Now, I just want to reiterate, as I have several times, that I have no position in Nvidia, neither short nor long, and I'm not advocating shorting this company. Shorting a company with a chart that looks like this is like standing on the train tracks and betting that freight train barreling towards you is gonna stop. You might be proven right eventually, but you could still wind up a pancake. It's entirely possible that Nvidia stock could continue going up to the right. The price targets keep getting raised, $500, $600, $700.
As long as you're asking, why don't we go for a cool $1 million?
You do not think that would be too much?
Nah.
But sooner or later, those growth numbers will taper off, and once that happens, people will finally start asking questions, because nobody asks questions when the numbers are going up, even though that is the time to ask those questions. And of course, once that starts, everybody's going to say, nobody saw this coming. And well, that's true. Nobody saw this coming. Till next time, live small and dream big.